I got a couple of my friends on the podcast today from Conduit Power. We got Ben and Travis, my guys. What's going on? Travis, we've
Hey.
known each other for a
Yeah.
few years now,
Yeah.
since 2020. I think.
Yeah. I think we were both getting started on different ventures at the same time. Yours
Yeah.
took off.
Yeah. Well, that's what's funny
Yeah.
is like when we actually met, we're just working on completely different things
That's
than
right.
what we're doing now. And so it's been kind of funny to see that
It's
come.
fun journey. I love fellow travelers in the entrepreneur
Yeah.
space.
Yeah, absolutely. So appreciate you guys coming on. Conduit Power, just real quick, give me the 2-minute pitch on what you guys are.
So we take stranded flared gas and convert it to power and give the benefit of that power uplift to E&P producers.
Cool.
Power producers E&P producers are experiencing low gas prices. We're able to take low gas price with high power prices and volatility and capture that value and align with them to pass that value back to them.
Interesting. So I don't want to get too in the weeds here yet, but are you guys offering nat gas turbines, the actual equipment and operating them? Is that?
Yeah, we do full turnkey. So we're full EPC. We design, build, operate, manage dispatch into ERCOT for the producer. So
Cool.
you can think of us as the independent power producer for an E&P producer.
No, this will be a good conversation. It's just this has been a topic that's just been growing over the last couple of years, and I have a lot of friends that are into distributed energy
Yeah.
resources and things of this nature,
Yeah.
and so
It's a fun market.
It's always it's a fun topic, always, and it's just continuously evolving, right? And so, real quick, tell me about y'all's backgrounds. Travis, I know a little bit about yours. Ben, I don't know as much about yours, but yeah, just tell me like y'all's life story and
Sure.
where y'all come from.
Yeah. So, coming out of undergrad, I went into the merchant energy space. So back, 20 years ago, this was when the Enron, El Paso's, Dynagy's were out there trying to build assets, power plants, for example, to operate those as merchant facilities, breaking up PPAs. That's kind of where I cut my teeth. And I've always had that in the back of my mind on all ventures. It's how do you take physical assets with disparate commodities and find optionality between those commodities, and how do you capture that value?
Yeah.
Coming out of the blow up of the merchant energy space, I went into investment banking, did my stint there, did my private equity stint, ended up joining as a CFO for an upstream oil and gas company, where it was really my first exposure to the upstream space, and it really gave me a lot of insight onto some of the opportunities and the problems the E&P producers face, and one of those was power. So, power is so critical to the operations of for an E&P producer, but it's also kind of an ugly stepchild. It's just assumed you go develop an area, you connect power, and the utility shows up with the delivered power. But my experience in doing that is, power doesn't always show up, and the power quality of it's pretty disparate. And so,
Which is an interesting point, because that's something I didn't appreciate a few years ago, was the quality of that power as well is super important, especially with things like ESPs and things of this nature.
And that's actually one of the experiences that kind of fed into the Conduit story. Is we were developing an asset lift on ESP, and ESP kept going down because we had power quality issues, voltage sags, major issue. And so when we coming out of the experience in upstream, started my first venture. It's about the time I met you, developing an investment vehicle around upstream and capturing optionality in undrilled locations. But really wanted to see, leaving that business, saw a disconnect between what we're seeing on gas prices, and with flaring being a major issue, the methane penalty was kind of in the air, coming down the pipe. And we're seeing with the influx of renewables, wind and solar coming in, what it was doing to the grid and volatility pricing. And so really trying to figure out, how do we take this experience on the merchant side? How do you take the experience on what the E&P producer is facing on power quality, what we're seeing on the power market side, and combining those into a thesis? And that's where it led me to the Conduit.
Yeah. What about you, Ben?
No, I appreciate all the perspective Travis gave on Conduit. I'm right now working for Travis directly on business development for Conduit. And I'd say characterize my last few years of career as focused on energy transition related businesses, and especially at the earlier stage where we're seeing adoption of new technology, but a real need for innovative business models and financing structures that get technologies like this to scale. I would say Conduit, in a sense, is a little bit more of something more traditional I've worked on, because before worked for solar and wind developers, worked on the battery energy storage side of things. I've worked for an EV transition business on the biz dev side, but now just exciting to take more familiar technology and deploy it in a creative way. Yeah. Where you're really just looking at, the bits and pieces of which E&P and midstream, et cetera, that they're familiar with, but we can deploy it in a way that actually creates a lot of value in the field. So
yeah, when I started kind of learning more about this topic and this nuance in the industry was, several years ago when Bitcoin miners were really looking for cheap electricity and coming over here from China, and I started realizing like, you have all this stranded gas. It's like, but also it's like these E&Ps have these substations and they understand, how to access cheap electricity and things of this nature. And started realizing, I was like, oh, there's actually this entire ecosystem. Yeah, right. And I found that to be kind of eye-opening. And I know I actually have podcasts. You guys would appreciate this. You can go back a couple of years, and I was like, yeah, someday I was like, I think that you'll have oil and gas companies that are using nat gas to build power plants out on location, and they're selling.
He had the crystal ball.
Yeah. And so
we didn't want to admit it, but that's where we got our idea.
Yeah, that's
it. Exactly.
It wouldn't be the first time someone's got an idea.
We came up with it ourselves.
Take the idea. Take the ideas. But I always just found that fascinating. And especially, I have this whole thesis that, there's going to be the onshoring of manufacturing, and they're going to come co-locate where there's high energy density. And so it's like, hey, you can put electricity back into the grid through ERCOT, or you start building these microgrids out in remote locations. So, it's a pretty interesting concept. And the first time I saw one of these turbines, I recorded a piece of content with EQT several years ago, and they were using it for their E-fracs. And that's when I just started. I was like, damn, dude, you can use these as like mobile peaker plants,
Exactly.
Just put them out.
Well, places, that's what was fascinating to me. Bridging the gap from when I started in the power space 20 years ago to where we are today, just how technology has improved across the board. So when you're talking about peaker plants back 20 years ago, you're talking about 14,000 plus heat rate.
Yeah.
You're talking about now you run a gas recip at 8,500 heat rate or below.
Yeah.
And so when you get to those points, you're saying that you can actually have efficient deployment of small scale generation that can capture value at an attractive rate and compete with best technology.
And it's very dispatchable and mobile.
Yeah, exactly.
Like with these, and I know I'm gonna like dumb this down a little bit. It's not this simple, but it's like essentially, you have a turbine that you can bring out on a trailer, and it's very mobilized, right? Whereas a peaker plant, huge capex,
capex, you're stuck at that interconnection point. Interconnection queues and ERCOT are extremely long for transmission level generation, for distribution level, which is where we play. So when we design these, and we're using gas recips for our main thermal technology. We use batteries to combine with that to participate in both thermal or energy and ancillary services.
We should talk about that because I recorded this, so you'll find this funny. But when what was the hurricane that hit New Orleans a couple years ago? Was it Ida?
Yeah, I think so. I lose track of them now.
Anyways, flooded New Orleans. That was actually the wind damage that was really bad. But I'd sent out a tweet that went viral because you saw these videos like the Cajun Navy and shit bringing down like diesel generators. I was like, I don't see any solar panels being shut down there.
That's right, exactly.
Someone's actually, there's a nonprofit that's headed down there that has these solar trailers. And I was like, you know what? I was like, put me in contact with them. I said, I'm going to go down there and I'm going to help them set up these solar stations and vlog it. I was like, I'm willing to hear it out. And then anyways, when I was talking to the founder of that, he's like, we were just talking about battery technology. And he's like, one thing I think is really important. He's like, it doesn't matter what source of energy you're using to charge batteries. He's like, batteries are the future. He's like, even you look at like diesel generators, they're efficient at 80% load. He's like, and so it's not efficient just to have generators sitting there running. He's like, you need batteries to charge them. That way you can be more efficient across the whole process. And so I think that's an interesting thing to talk about, is utilizing batteries along with nat gas turbines. And then the business model of, ancillary services with ERCOT.
And this goes back to the ecosystem idea, right? That there's not one size fits all. Like a lot gets lost in the noise of what's green, what's not, what's energy transition, what's not. We're definitely not against wind and solar. We think wind and solar is a great
energy is energy.
Energy is energy, and that has a place. But it does create a change. It fundamentally changes how the grid acts. And so for all megawatts, all capacity put on through wind and solar. Wind doesn't blow all the time. We know the sun doesn't shine all the time. So you need a form of dispatchable power that can meet that need. And so, the transition fuel that we see is natural gas. That's the main backbone for dispatchable power. Well, how does battery fit into it?
And there's lots of it.
Then there's lots of it. And especially when we start talking about the concentration of associated gas in the Permian and concentration of wind in the Permian area or LZ West. But you need dispatchable power. You need that. And where does battery fit into the equation? Well, it fits in a couple places. Like battery itself is, it can be both considered a form of storage and a limited form of generation.
Yeah.
But its primary function, it also provides a substantial amount of grid stability. So those ESPs tripping and the voltage sags, that's primarily driven by the ability for a battery being able to supplement the grid and maintain voltage.
I think it's interesting. Like anyone that talks about batteries, you get a different answer on how it's categorized.
Yeah, exactly.
Always.
Yeah. You made a comment about it being like, it generates power. I'm like, no, it doesn't generate power.
It doesn't.
It stores power.
It stores power. Yeah, and that's what
can
it gets. It can, but very limited basis. I mean, you're looking at 1 hour, 2 hour battery dispatch, and so even with like the influx of battery in there and charging overnight with low cost wind and low cost wind overnight and solar when it's shining, that still doesn't provide that dispatchable power need.
Yeah.
And what we saw is, again, you have a major shortage in ERCOT for dispatchable power. I mean, we're short. Like when you look at like some of the peak components, we were short up to 18 gigawatts of dispatch power. You need that. That's not going to be solved by battery. That's not going to be solved by more wind. You need thermal generation.
Also, the compounding problem that's happening right now is that investment dollars aren't going towards thermal generation, and a lot of the peaker plants that we have are extremely old. And so it scares me a little bit because I've been talking about this a lot. Is if you look at wind capacity, it's just crazy how much wind has been built in Texas. And the problem is that thermal doesn't have the same incentives to invest those dollars.
That's right.
But us as citizens, we need that thermal generation. We need dispatchable power. And so this is where it gets super interesting with nat gas and turbines for sure.
That's the place where we love. So, you look at wind and solar depress prices over the long run because once it's installed, it's very no cost of generation, but it doesn't always, wind doesn't always blow, the sun doesn't always shine. And what that creates is while forward curves and the long-term outlook for prices can be flat or low volatility, what happens when the wind isn't blowing, the sun isn't shining, is that's creating daily and hourly wild fluctuations in price.
Yeah.
And that's where at a distribution level and with our design of both thermal and battery, we're able to capture that value. Yeah. And that's what's unique. Again, combining where the technology for the generation has come to this intersection point where our backbone is analytics and quantitative analysis on being able to capture those very short periods of value that are, like we call it clipping nickels and dimes and dollars, and then being able to capture the big amounts when we have major mismatches of supply and demand that happen now more frequently.
Yeah. It's funny. I have this Twitter post I wrote out about this power plant I want to build up my house, and it has solar. I have a power wall. I have a nat gas generator. I was like, I have a Ford F-150 with battery capacity, lightning, and then I've got my 12 valve Cummins just in case I need something that runs on a diesel. But what's funny is I used to be a customer of Griddy, and I actually fucking love Griddy, but the problem with Griddy's business model is that 99% of their users didn't actually understand what the business model was, and that you had exposure to wholesale pricing. Right. But I was always like, if I actually took the time, write a script where it utilizes, hey, we're going to charge up my home batteries when I'm getting cheap electricity from Griddy, and start using software to make everything communicate. And so
we just stole your idea. That's all we did. And we took it to the generation side.
I need royalties.
We downloaded all the scripts so far.
But no, that's what it's super interesting to me, especially as I really love the idea of virtual power plants and bi-directional metering on homes. I think that this is the future, is like taking all these distributed assets and being able to make it all coordinated and communicate with each other. And obviously there's a lot of barriers and misaligned incentives that have to kind of get through. But I think that it's a bigger theme.
I think too, for us, primarily what we've been focused on so far is grid facing applications. And that's really where most people think about generation mix and power consumption. But what we've seen growing as part of our strategy is that even beyond EMP, most folks are looking to be power consumers at the local level. So any kind of distributed generation that you can build that's reliable, that can bridge you to grid connection or provide a long-term source of reliable energy on site. We're seeing that emerge in beyond EMP and even into data center space and even into the midstream space. We're seeing a large application of distributed generation projects become more of a integrated strategy with new development for large C&I commercial industrial load on the electrical grid.
Yeah, that's why we started the Empower event, because that was our thesis, was that data centers, whether it's any form of high performance computing, whether it's Bitcoin mining or GPUs, it's energy infrastructure.
Yeah.
I don't know if y'all saw, but last week, Mark Zuckerberg announced that they added John Arnold to their board of Meta because they need to get smarter around energy.
Yeah.
I like to think that what happened was Mark Zuckerberg went to Google, was like, who's smart in energy?
Yeah.
And our podcast with John Arnold came up.
Exactly.
Yeah. It's only like good public piece of content with John Arnold. So, Zuck, if you're listening to this, man, train jiu-jitsu. Let's go get a roll.
Exactly.
Yeah.
Podcast and a match.
Yeah, exactly. But that was the whole thesis, was like, there's all these end users that, want power on a localized level. And there's just all of these different parties, whether it's EMPs, whether it's renewable operators. And so,
well, you talk about the ecosystem, and that's the part where it's so much fun in the space right now, is that ecosystem's there, but it's not well connected.
Yeah.
And so you have the end users, you have the generation,
you have all the components and the parts, but it's not
connecting
connected.
the dots.
Yeah.
And that's where we found that we really make an impact, is like, again, the technology we're using, it's not the newest, latest and greatest. This is all proven technology on this side. The quantitative analysis, taking some best practices, machine learning, and how do you optimize. It's really in the commercial constructs of finding what the pain points are for these various parties. So it's at the utility side, takes too long to build out interconnections to meet the fast-paced growth for EMPs. For the EMP producer who's flaring or has stranded or curtailed gas, or just uneconomic gas right now,
Yeah.
they're not incentivized to build out midstream infrastructure.
Yeah.
So it's, how do you connect the dots to give a value proposition that captures value where it's needed, where it's available in the ERCOT market, which is lack of generation, slow transmission build out, EMP producers, which is, we need an outlet for gas where we can get more value. That solution that we've created is our conduit. We've created, it's funny you mentioned the virtual power plant. What we offer to EMP producers, we call it the virtual pipeline outlet. We're basically giving you capacity in our generation, which gives you higher gas price.
It's funny because that's always what I've said with Bitcoin mining. As like, you're just moving the midstream and downstream portion to on location at the wellhead.
That's right. Yeah.
It's just a digital pipeline,
and it has a major impact. It's like when you start talking about large scale transmission lines, large scale transmission generation, it just takes too long, and it's too capex. You're not economically incentive to do so at this moment. At the distribution side, you're able to transact quickly, you're able to get built quickly, you're able to capture that value at those smaller increments, which again, you're doing it more times over, but you're able to deploy more capital, more megawatts. Address the producer's concerns quicker than what's any other option that's out there.
This is, I had a tweet that was a little bit controversial a while back.
No, I just don't believe it. I've never seen anything controversial.
That was a really stupid statement by me. But essentially what I was talking about was, Travis, you'll appreciate this, but remember back in the day when EMPs are like, oh, we have 40% IRR on these wells at half cycle.
Yeah.
Always back out all the G&A
always
and acquisition. And it wasn't intellectually honest, right? If you're not looking at things from end to end holistically, I was like, the same thing has happened in renewables, because what happens is people like to tote that, hey, renewable energy is the cheapest form of energy, but that's only looking at the asset level. It doesn't look at backup generation, storage, transmissions, things of this nature. And what that results in is a higher cost to the end user, which is us as taxpayers and energy users. And what happens is, like, you have these big spikes and volatility, like you were talking about. And so what's interesting to me about this is it essentially, with nat gas generation and battery storage, it's this solution to level things out.
Right.
And essentially, bring flatter costs.
And that again, we're all full in support of renewable energy as a backbone to the overall energy mix, but the downside of renewable energy and how it's levelized cost once it's built and incentives to do so, it does crowd out thermal generation. It crowds out dispatchable generation.
Yeah, for sure. Yeah,
and that's
the incentives aren't the same for the power generation. And my thing too is like I've always said, I'm like, hey, building out wind capacity is good, but the problem has been the acceleration or the rate that we're building it out without the same investment dollars going into thermal, because that's where you start to get into these huge issues.
Wild swings. And that's, the ERCOT, I'll just focus on ERCOT. We focus on ERCOT primarily. We also look at PJM, SPP.
Okay.
But, ERCOT specific, they're trying to get ahead of that. We don't have a capacity market in ERCOT that's primarily primarily managed through ancillary services. Doesn't provide that base cash flow you need to justify large scale build. But when they're trying to get ahead of that with incentives, so tax incentives that are coming down the pipe and et cetera, but it still doesn't, the time to get those projects designed, built, interconnected, and up and running, we're talking multiple years out. Again, that's where like there's this open market to, close that gap, connect that ecosystem between the producers, the problems they're facing, the fact that we're just wildly short dispatchable power.
But I mean, it's a capitalistic solution.
It's capitalistic. It's all commercial, not driven on any tax incentives.
Yeah, and the best solutions always come from capitalism.
And that's
what I love about oil and gas and energy.
And that's what we love about our model. Like we're not relying on any tax incentives. We do have a great tailwind. Like the methane penalty is coming down the pipe. That's something that E&P producers should be taking very seriously on how to address it. It's not being addressed by midstream right now. There's a kind of a standoff between E&Ps.
But even if you don't, this is the thing though. What's crazy is it's not even methane regulations and penalties are coming. It's like you are literally burning off your product.
Of course.
How can you extract more value out of your product?
That's right.
And that's the case. Even if it's not a environment or climate thing, it's from a pure capitalism perspective. You should be generating value, and there's ways to technology has allowed us to do
just
that.
burning dollars at it into there.
And so it's I got 3 E&Ps that hit me up last week alone with nat gas prices where they're at. Hey, what should we be doing with our nat gas on the Bitcoin mining space? And so it's funny how low nat gas prices all of a sudden turning everyone into capitalists and what should we do with this gas? But flaring, it's like you don't have to flare. And so I think it's one of the more interesting opportunities in the world right now, because not only is it good for the environment and good for the ESG fucking check marks, but it's a good business decision.
It's just commercial. It's just
So if I'm an E&P, let's dive into the model a little bit of what the value prop is for an E&P working with you guys. So I'm an E&P out in West Texas, and I have 6 million cubic feet of gas a day, and I'm trying to figure out what I want to do with this. Let's say I'm flaring it. How do I engage with you guys? How do I work with you? And what's the value prop, for me? How am I making money on doing this?
Sure. Why don't you start off?
So pretty straightforward from our side. I think it starts really with the highest and best use for the stranded gas. So oftentimes we're seeing that there's an application where we can redeploy stranded gas just to provide baseload power on the site. So if that's a straightforward application, but for 6 million a day, commonly we're seeing that the amount of that gas being put to work as power generation exceeds their load needs on site.
So are you essentially saying, hey, look, you're already drawing all of this electricity from the grid. You can put a turbine out here and supply your own electricity from that gas.
Yes. So there's that on-site solution. There's something we can do with the gas, putting it to work on site as baseload generation. But primarily what our business is focused on is what we've been talking about is dispatchable gas being sent into ERCOT is where we're primarily focused. And so for the producers, the value prop on finding a new market, new place to send natural gas, especially if it's stranded, if there's no other use for it on site, is if we build generation and we can interconnect to ERCOT relatively quickly at those volumes of gas, there tends to be a much higher availability of a market for gas in power. And so we can monetize it in a day-ahead basis.
You have liquidity. for the energy.
A great higher value market, better end user for natural gas. And we can, because of how flexible and how quickly we can interconnect to grid, there tends to be a day ahead basis or a real time basis under which we can settle for power. So it really becomes what we've talked about is a flexible solution that looks a lot like a new midstream offtake.
I was just thinking, sorry to go off on a little bit of a tangent here, but I like to bash on Massachusetts all the time. Just the story of Massachusetts loves natural gas. 60% of their electricity is generated from it, heats over, 60% of their homes, but they import all of their LNG from places like the Caribbean and even Russia sometimes. And it's like you won't build pipelines from the most prolific natural gas basin a couple 100 miles away from you, but they wouldn't have any problem with EQT, generating electricity on location and then tying it into the grid. So it's like you can almost eliminate this whole pipeline and FERC issue of needing to build nat gas pipelines by just producing electricity on site and then transmitting the electricity.
That's that. I mean, you're pointing out the closing of the ecosystem, right? Like you can build you have NIMBY issues on building pipeline. You have capital requirements building pipeline to get to market. You have multiple issues. You also have load use, gas use in those same areas. It's what's the most efficient way to deploy capital. Make a return to meet market's needs.
Yeah, that's super interesting. Sorry to cut you off.
No, I think the point is more broadly outside of ERCOT. That point is right across. Like you said, we're looking at PJM, we look at SPP. We're seeing that there's a general need to deploy natural gas in a more profitable way across the United States. And we've actually seen a lot of people taking proactive steps to permit plants that are market facing and get at least the initial steps started. But maybe there's a bit of a gap in how to commercialize it, how to work out the contracts, how to know what it's worth on a merchant and a fixed basis in power markets. And so been impressed with the amount of movement there's been, just recognizing the fundamentals of what natural gas could be worth as dispatchable generation in power markets. And we're just excited to see that we can come in and provide some consulting and some value add on just understanding what it's worth, but then ultimately taking it to COD. And
so, you guys act like a EPC. You mentioned like we'll come in, do the consulting engineering. If I'm an E&P, from y'all side, are y'all putting up the CapEx for generators?
Yeah, everything we do is off balance sheet. All the capital comes from us. We design, build, operate, and manage market operations. So it's full turnkey. And what we face the E&P producers, again, we're offering them a virtual pipeline. So there's capacity in the pipeline, and they get the revenue share from the participation in the market sales. So very easy to understand, and what the value proposition is. Going back to your 6 million a day equation, that's 30 megawatts of value. That's a lot.
For sure. No, that's super interesting. That's always where some of the sticking point is who puts up the CapEx for generation and stuff like that. But you come in and turn,
especially when you're talking about those half cycle IRRs. So high. Like we posted, the return's great, but it's great if it's on someone else's balance
if you're an E&P, you want to produce
you definitely
a commodity.
You want to be focused on extraction.
Just being able to sell it off is the name of the game. And so super interesting. You guys are private equity backed, right?
Yeah. Okay. So we were funded by Grey Rock Investment Partners. So we're part of their energy transition fund, which talk about the space we raise capital in, saying we're planning on deploying thermal energy using natural gas as an energy transition. We got a few no's on that as a strategy for the per plays, but we love working with Grey Rock because they saw how you could do something that's not tax or government subsidized, purely commercial, and a clear value proposition to decarbonization.
What's funny though is I think that narrative's changed.
It is
over the last year. It's funny to kind of see the cycles that we've gone through over the last 4 or 5 years. Where, I actually saw someone put this out on Twitter. You put the meme where it's like the guy standing up and like saying some like unpopular opinion, and he put that, and he's like, natural gas is the transition fuel.
It's the transition fuel.
This is from like a climate guy,
right?
And so that narrative is changing. It's like, oh shit, we actually do need natural gas. There is actually a benefit from it, and the biggest benefit of it is that it can be deployed on a commercial level with no subsidies.
Exactly.
That's great.
So
Yeah, I think that the timing is
Yeah,
is definitely
it's nice to see it actually turning to something that's more realistic. I hate the one size fits all, or there's only one solution. It's, we need renewable energy, we need dispatchable gas, we need
it's all
grid
the
stability,
above,
we need all of it.
above.
All
Yeah,
the
for
above.
sure. Yeah, so shout out to Grey Rock. I'm gonna bash on Grey Rock for a second because I think it's funny. No, it's just funny how private equity, BlackRock, Blackstone, Grey Rock.
That's
I forget my colors and types of sedimentary rocks. And so,
Yeah.
always, dude, it's not a podcast if I'm not poking fun at private equity groups. So, did they? Do you know? Is Granite Ridge a portfolio company?
Yeah. So
yeah. I was supposed to meet with Granite Ridge yesterday while I was up in Fort Worth, and they told me that they were backed by Grey Rock. So.
Yeah. So it's now publicly traded company, Granite Ridge is. So, but Grey Rock still has investment in.
Cool.
In it, yeah.
Got you.
Yeah.
I was just connecting some dots there. So, for you guys, what's the future look like over, the next 12, 18 months? Where are you guys at in terms of the life cycle of the company, getting out to market, just kind of give me some color on
Sure.
that.
We're in at this point, we call it super growth mode. So a lot of, getting the venture off the ground is proving up the thesis and seeing, does this actually work? And we're able to quickly demonstrate that what we're doing fits the market. We're able to execute. And now we're at scale, we're working to scale as fast as we can.
Yeah.
The market on the power side, ERCOT's going to be short for a long period of time. Dispatchable gas, stranded gas, uneconomic gas, or low price gas. Doesn't have an easy solution. That market is attractive. We're trying to partners with as many E&Ps as we can to give them a better outlet for their gas.
Yeah.
We've been focused primarily on ERCOT. We're about to move into PJM.
Yeah.
It's a different scenario there. It's not flaring, but curtailment.
Yeah.
Low economic prices there, but they're short more power.
Yeah.
And we'll be expanding that area. So it's really a matter of, continue to execute, continue to penetrate, and trying to find producers that have this dilemma of getting more value for their gas.
So with that, on an ending note, if E&Ps are listening and they want to talk to you guys and potentially work with you, where can they find you?
So our website, www.conduitpower.co. You can also reach out to Ben or myself, B. Foley at conduitpower.co and T. Winholtz at conduitpower.co.
I'm giving out the email addresses.
Come bring it.
Bring all the spam.
Bring it. No,
so we'll drop links to conduitpower.co and to y'all's LinkedIn. So yeah, if you're at an E&P and you want to talk to these guys, it's definitely interesting stuff. And I'm glad that y'all got to make it on the show.
Yeah, I really appreciate you having us on.
Yeah, it's been a pleasure.
And so happy for you, man. This is so great to see how well
I appreciate it.
It's awesome.
Yeah,
it's
awesome.
It's fun to see other people building too and see the success. So I'm glad to be a part of it.
It's been a lot of fun.
Been along for the ride. So if you guys like this episode, please share it with a friend, share it on LinkedIn, share it on Twitter, send it by email. I don't give a damn how you share it. Just share it. We will catch you on the next episode.
Awesome. Thanks.